And then you pay low fees, and then over time it appreciates. And then if you buy some treasury bills or fixed income, you get that. You should have less of those when you're young and more than when you're older. That's just diversification. But you know, the best test I do with my kids' friends too, go into a closet, go into your closet and look at how much shit you have you don't wear. Because you either bought it because you thought you were going to wear it and never wore it or wore it once, and you end up wearing 20% of your portfolio all of the time and 80% you pissed away. I mean, that's really stupid. And so for a young person, a young woman or man, don't do that. Start putting, just buy the minimum stuff. And another thing I learned from my mother, this is interesting because I saw it happen at her death. She, would buy 2 Chanel jackets a year, really expensive Chanel jackets, handmade Chanel jackets. I do business with Chanel because of, the legacy of my mother and the whole Coco Chanel thing in watches. I love those guys. And her theory was this will never get old. And it never did. A classic vintage Chanel jacket from the 50s that's well kept is worth a fortune today. The classic, it still wears beautifully. They're so well made. So she wouldn't buy crap. She'd buy really good stuff, but just small amounts of it. And over the years, she'd built up this portfolio of amazing clothing. And when she died, the women in our family had a catfight over her portfolio. Unbelievable.
Is that in part why you have so many watches? I've noticed you have a watch on either wrist right now.
Yeah, I'm pretty big in watches. I mean, but watches to me, every piece I have marks something in my life that was important. A deal, a child, graduation, something, every piece. I've got a lot of watches.
How many have you got?
I don't even say anymore because of the insurance policy I have. I got a lot.
Do you invest in, you're talking about your mother's investing strategy, and one of the things you said is she invested in dividend stocks.
Yes.
What is a dividend stock, and should I be investing in dividend stocks?
Yeah, I mean, a company, if it's profitable and it's operating and its business plan is working and it's growing market share, at some point says, I'm going to distribute some of the success of our profits to our shareholders. That's a dividend. And so they send that cash to you, and you can either redeploy it in other ways or live off it or whatever. Many tech stocks until recently did not pay dividends, but now the behemoth tech stocks do pay dividends because the demand of an aging population is I need to eat. And so I like to own the stock for growth, but I also want to get some of the profits. And so dividend-paying stocks used to be utilities, but not so today. Every sector has dividend-paying stocks, so I prefer to own dividend-paying stocks, div payers. And then I also own fixed income products. I also own crypto now, and I own alternative assets like gold and watches. My watch collection's actually done quite well, even though there's been a correction. There's volatility, but I have some watches that have, I bought for $200,000 that are worth over $1 million today.
Crypto. So are you still bullish on crypto as an investment?
I am actually, but people get crypto confused with its real potential. Let's talk about digital payment systems, because what's about to pass first, we are days away from this happening, is the Genius Act, which is actually the Stablecoin Act. It was just passed by the Senate 48 hours ago. It's going back to the House. I actually worked on that bill 2 years ago. So if that bill passes, it's really nothing to do with speculating on crypto. It's a new form of payment. So if I wanted to order a watch from Simon Britt, who's somebody I buy watches from, he's a master watchmaker. Right now I have to take US dollars. I've got to get through a know your client prerogative. I'm treated like a criminal by transferring $100,000 over, turn it into Swiss francs. It takes about a week. I get screwed for about 200 basis points in the whole thing. If he accepted USDC, which is actually a stable coin backed by the US dollar, just went public, very successful IPO. I was a shareholder in that company too. That's one of my best IPOs in the last 2 years. The transaction would happen in less than a second. And the fees would be a hundredth of what the costs are right now. So it's a digital payment system. The price it's no speculation on it. It's backed by the US dollar, treasury bills. So it's sort of a new form of digital payment. That's different than Bitcoin, which is a speculation. If you believe in Bitcoin, you think it's a digital gold and you live through the volatility. I believe in both. I believe that crypto will be the 12th sector of the S&P in some period of time because it provides productivity to all 11 other sectors. So the way I own it is I own the exchanges, My exchange up in one called Wonderfy up in Canada just got acquired last week or 2 weeks ago by Robinhood. I'm happy because I think Vlad, who runs Robinhood's great. And now he's got 1 million plus accounts in Canada, a market that he'd never participated in. But the point is, this is never going away. It's going to stay forever. So how do you participate? You can buy some Bitcoin, just like you can buy gold, buy it in an ETF or actually own it yourself. You can buy the exchanges. You can use, you can buy Circle stock now it's public. Circle makes USDC. You can buy USDC in an account and make 4.1% interest on it right now. So there's a lot of ways to participate, but yes, I'm here to stay. But I've grown up. I was around during the period where the crypto cowboys lived. And I survived that all. And I even testified in front of the Senate and the House and whatever else the testimonies were during the tumultuous period. And most of those guys went to jail.
Your portfolio in terms of Bitcoin allocation or crypto allocation, what is it now?
It's at about all in. We marked to market last month. It was 19.1%.
19.1%.
Yeah, I have to keep it under 20. It's a sector. So, but remember, in that is the cryptos itself, the Bitcoin, the USDC, and the shares of the infrastructure companies like Circle and everything else. I've got, it was a very successful IPO.
One of the first things most people do when they get a bit of money, usually from their job, is they get a mortgage on a house. Because we're kind of taught as we grow up that the best way to make, or not maybe the best, but the most obvious way to create wealth is to buy your first home.
Yeah, there's a very basic rule for that. And I understand it, and I did the same thing. But what I made sure again from my mother was never let the mortgage and the cost of maintaining the house be more than 1/3 of your income. 1/3 of your income. If it's more than 1/3, you bought too much house. So it's better to buy a house that's maybe it's only going to be 1,900 square feet to start in a neighborhood that you may not want to stay in for the rest of your life, but start to accrue the benefit of real estate from that point of view. Learn how to manage it. Maybe you rent part of it out or whatever, but it can't be more than 1/3 of your income. The mistake that people made, and they're starting to suffer from it now, is when money was so cheap, mortgage rates were under 4%. They were 3.2%, some of them. They bought massive houses. And now they're running into having to refinance those houses at much higher rates, more than 7%. And it's becoming 60, 70, 80% of their income. They're screwed. They bought too much house. So it's about making sure that you can manage that. And also you want some diversification. Yes, a mortgage is okay, particularly if you're having a family, because you're going to pay rent or you're going to pay a mortgage, one of the two. But you want some diversification into starting to build up that investment account for when you retire so that you have something to live off. If you only put aside 15%, if you're making $70,000 a year and you put 15% aside from when you're 25, you'll have over $1.5 million if you just invested it in the stock index, in the S&P 500. That's what history has told you.
In what time frame?
Your whole career. I mean, you're going to be 65. You're 25, 65. You just stick with that protocol and you'll watch it grow. You'll watch it grow. You go up and down as the market goes up and down. Some years it'll go flat, whatever. But it's the people that don't even think ahead and find themselves at 45 mired in debt, including a mortgage. You want to get rid of your mortgage in your 40s.
Most people's primary investment asset is the house they buy. Is that
yes,
smart?
it is, but it's also the debt they own. It's a primary asset. How much debt does it have on it? It's